All right, here we are. CoT Report Friday Roundup. Welcome to the first episode of what we're calling a Friday Roundup of the CoT Report. My name is Jonathan, and this is Paramay Trades, a community study group dedicated in large part to the study of commitment of traders. Many thanks go out to the teachings and literature of Larry Williams. Larry was kind enough to publish a handful of books on commodities trading. The book Trading Stocks and Commodities with the Insider, or with the Insiders, is where the inspiration for this community came from. The purpose of the Friday Roundup is to dive into the CoT report, study it, hopefully chart the impact of commercial interest as a leading indicator to uncover the probable direction of future and current market sentiment. At this moment, we are leveraging a 6-month and a 3-month or a 3-year index generated from the report released by Barchart.com, who populates their information from the CFTC.gov website. It should also be clear that I am in no way soliciting financial advice. I am not a financial advisor. Trade and speculate of your own responsibility. All right, with that being said, we can get off script a little bit here and just take a look at the report. I won't dive into details too much as to how we're producing the numbers that we're producing here, or how we're producing this report. It's probably going to be found on the YouTube channel somewhere, describing the specifics, how we get the numbers, where we get them from, how we generate the index. So we're working with 2 different indexes here, the 6-month index and a 3-year index. Started working with the 6-month index because it was a little bit more responsive. 3 years obviously has a larger impact, and we would like to see those numbers move a little bit more, to use this as an indicator with confidence. But the 6-month we're finding for short-term trading and short-term swings is a little bit more assistive. So what can we find in here? What can we find in this report today? One thing I've been a little bit bullish on is ZM, which is soybean meal. So let's just take a look at where soybeans. Here's soybean meal right here. And this is why we're getting bullish on soybean meal. If we look at the 5-week prior column of the 6-month index, we can see that these guys the sentiment has changed considerably. So if you're not aware, anything over 80% for commercial interest means that they are extremely positive or extremely bullish. So they're buying a lot more than they have been. With the 6-month index, you can see that the sentiment change is so much larger. If we're at 100%, it means that they set a new high, that they're buying a heck of a lot more than they have in the last 6 months. We are up over 80% on the 3-year index as well. And they've been rather bullish on the 3-year index for some time now. This is about a 16% hike on the 3-year index, so that's pretty impressive. And you can see that it's much more responsive on the 6-month index. So this kind of gives us an idea that, hey, something's going on here. We got to drill down. We got to take a look at what's going on. Is the market about to move here? Are these guys about to move the market? Commercial interest this is big money. These are producers, merchants. These are the guys who technically, not all the time, but more oftentimes than not, know which way the market's going to go. And we're using the Commitment of Traders report as a way of kind of leveraging it as an indicator that, hey, the market's about to move. We want to be on the right side of the trade here. So this first window here, this tab is pretty much a summary. This gets us thinking about what's going on. So I mean, this has been one of my top picks over the last week. So we can drill down into the commodity here and take a look. And if we're looking at the sentiment change here, you can clearly see the shift in sentiment towards bullish on the 6-month index. They've been pretty bullish for the most part on the 3-year index. They haven't wavered very much. But we're up in the 90s here. We're almost getting ready to set a new high in the 3-month index as well. That means that they're net long more than they have been in the last 3 years around this position. So let's just take a quick snap of this here, so we can show this. I like to do this from time to time. Makes things a little bit easier. All right. So at what point were they extremely bearish on the 6-month index? This is back some months here. Well, they quickly hopped foot and went the other direction. Then they got really bearish again. Over 1, 2, 3, 4, over the course of 5 weeks. So we're going to pay attention to these numbers here, and then also apply this to the chart. So if you use Thinkorswim, that's the platform that I do use. I did take this this report and put it into an indicator, so we'll get into it in a second. But this is very interesting here, where we went from extreme bearishness here on the 6-month index, and now they're starting to pick up the buying considerably. This past week they picked up the buying considerably. Now let's just drill down into a chart so that we can actually see what this looks like. All right, so we've got the signal. We said, okay, something's going on here. We've drilled down into the tab. We've seen the sentiment change, and now we want to see what that looks like on a chart. All right, so here is the ZM futures market here, and I've marked this off for you. All right, the green line is the 3-year index, and the purple line here is the 6-month index. So we can see that this is a little bit more responsive on the 6-month than the 3-year. You might not, these moves kind of go a little bit undetected. You know, we're down here about 65% or something like that, and then the 3-year index moves up to, 91%. So while this looks subtle here, this is not subtle. This 6-month is not subtle. We see they broke into extreme positive outlook on ZM back here. Looks like towards the end of August. And their 6-month moved up considerably too. So they started doing a lot of buying, up from 32% up to 72%. Now that's a 40% hike for me. That's an immediate red flag. Okay, something's going on here. It looks like there's a considerable amount of buying going on by commercial interests. What happens to the market? Market moves up. So we take a look at the 6-month index and look what happens when they start to break bearish here. They start holding more net short positions than they do net long. And that's quite a move. 73%, and it dumps down all the way to 0%. So they set a new low down here. Market moves down a little bit. They switch feet again. 1 week, 2 week bullish. Market moves up a little bit. Now we're breaking 6-month index. We're dropping it again. 63%. We break down below 20% again, and they hold this for about 1, 2, 3 weeks. This is week to week. So this is about a 3-week negative outlook that they hold. What happens to the market? Market starts moving down. All right. So now we're in this position now where both the 6-month index and the 3-year index are soaring up here. We're up 100% in the 6-month, up 95%. What do we think is going to happen here? This is what I'm looking for. I found a safe entry on ZM at the bottom of this range. I'm not looking for it to just break this daily range bottom. I'm looking for this to move up quite handsomely. So this is the 2nd week that they have been bullish, and you can tell You can tell on this chart that they have been moving it up. Where was our safe entry here? For me, safe entry is on the WPR when we're oversold here. Comms are bullish. We're oversold. This is the place to get an entry, and it was. So if you took some profits up here against their range, not a bad idea. But I don't think they're done with this. I really don't. We're looking back at this chart, and a couple of things stand out to me. Comms are extremely bullish here. You know what? Let's do what I like to do, which is I like to draw a lot. It's a little harder to do on TOS. But let's take a look at this. This is kind of a perfect storm brewing for ZM. And I'm not going to be surprised if they take it the other way and this starts to rally. So we do use an average true range. So when this broke bearish, we kind of knew about it here. We said, all right, we know that this is going to go down. They've been holding bearish for about 3 weeks, and they killed it. If you waited for the true range to break right here, well, you found a safe entry. That was your leading indicator there. But we also pay attention to, so commercial interest is not, you don't just use this indicator by itself. This gets us looking at the market to say, okay, what's happening here? So we had high open interest right here. Bearishness, high open interest, and we're a little bit oversold here, or overextended. I don't like the word oversold, but that's what WPR terms it. So we're a little bit overextended on this chart. We start to move down a little bit. Almost a little bit of a divergence here. Well, it's not a divergence. This is what's happening. It's moving down. So, rule of thumb, break ATR, and I use an ATR trailing stop of 9 days and a factor of 2.0, I believe, on here, 2.5. You can use a 5-day, and you can go a little higher at 3.0. You can play with these things. You want to know where it depends on your risk appetite here, but market sentiment's up pretty high in this area. It's a good time to kill it, right? It's a good time to sell when market sentiment is up high. Market sentiment's up really high here. It's a good time to sell. It's rising. It's a good time to get out. Everybody's in the pool. So what we're looking for now, and what I think that commercial interest is looking for now, this is a perfect storm. Low open interest, a lot of buying, and you can see this thing's already starting to take off. Maybe it drops down a little bit and we get a nice pump. Market sentiment is down. This is the time for rally. When market sentiment is low, this is when you think rally. When market sentiment is high, this is when we think it's time to sell. It's time to go short. Was it a bad idea up in here? Probably not. Looked pretty good. Right? This should instantly be a warning. It's not the case all the time, but it's a perfect storm going on here. Sentiment is rising. It tops out. What do we got going on up here? We are not setting new highs. We are setting new lows. High, lower high, lower high, lower high. This thing's moving down. Sentiment up. Time to sell. So it looks pretty good. Looks pretty good from here. What if we base this just on commercial interest? Just commercial interest alone. You could do it. It doesn't provide for the most optimal setups, but here's a rise in bullishness right here. And it's quite consistent too. It's not, it's jumping all over the place. This is quite consistent. These guys have been buying, and they've been buying on the way down. Why would you be buying? Why would you be closing your short positions on the way down? With an anticipation of maybe a bottom here? You're certainly not ready to lose money. I wouldn't think that these guys were playing to lose here. Were they playing to lose down here? 3-year index started moving down a little bit. Market sentiment is low. And what do we got here? Open interest is declining. So this is what they want to see. Declining open interest. And then they take it the other way. Declining open interest. They're already getting bullish. They already got a positive outlook. WPR is already strengthening up. Market sentiment's not extremely low, like it was back here in October and in May. But this thing's getting ready to go. And we've got all the indicators sitting right in here in front of us. Here's your trailing stop at 296. Oh, it's up there pretty far. It's up here too. Well, we've got 2 candles on the daily. Punch straight through it. So, do you want to wait around and wait for that to break? Or are you going to look at an established range and decide, oh, hey, these guys are getting bullish. Open interests are high. But they've been, they flatlined. Open interests are high there the entire time. Are you going to wait for that to break? Or are you going to notice that market sentiment's moving down? They're getting bullish. And they're going to take it the other way. It's a small risk. You position yourself at the bottom of the range. Set your trailing stop. And enjoy the ride. So that's just a quick look at least CM in terms of what commercial interest is doing. We can do this with any of them, but let's do a roundup so that we know at least we can write off this week which ones we're looking at. I've got them highlighted here in green. Look at this, 5 weeks prior on the Australian dollar, on a 6-month index, and down around 1%. They're doing a heck of a lot of selling. Well, that's a 40% increase. That's worth a look. That's definitely worth a look. The 3-year index is moving up too. That's about 13%. Look at crude. 3-month index, or a 3-year index, it popped up about 33%. And a 6-month index, crude was another one that was on my list. That's an 80% increase. What is going on with crude oil? Well, look at this. There's no big secret. When they got bearish on crude oil, when they started reducing their buying, crude oil, it dropped out, hit the floor. We called that one. So we're moving down here. Reduction, 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 reduction. Oh, no, that one didn't reduce, right? Well, they popped up a little bit. Keep going. 40%, 23%, 16. I mean, we're in very bearish territory down here. We say bearish territory, negative outlook. Whichever one you want to use. 6-month index, 0%. 0% on crude. Now they're starting to move up, 13. Now they're slowly. And now there's nothing slow about this. They're getting bullish up in here. What's that look like on a chart? Let's take a look at crude here. This is one of my top picks. I bought at the bottom of the range here. We had a nice little range going on. What does this look like? They're getting bullish here. They're holding a positive outlook. And this looks like accumulation. This is looking like accumulation up in here. We got a nice range. Buy the bottom of the range. They're getting bullish. Buy the bottom of this range. Put your stop down here. Put a trailing stop in if you want. And ride this thing up. This is your 4-hour look. We're just looking at ranges here. So yeah, they're having trouble breaking this range here. But man, they lifted up considerably. And there's no big secret either. Market sentiment moved up. Let's do this. Let's do this here. It's a little easier. And we called this one. You had your trailing stop range here. So if you got in this trade, you made out beautifully. What's going on here with commercial interest? As this is moving up, as price is moving up here, again, another range that we had to work with. As price is moving up here, they were bullish back here in the 6-month index. This was the key indicator right here. They're buying. They're buying back. They were buying back here too. And they had a nice little pump. And they dumped it down a little bit. And then for 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, they were over 80%. Where did it go? Where did price go? Whew. It took off. Then we had a nice indication here that this was about the top. These guys, 1, 2, 3, 4. This was 4 weeks. And it was no big secret. They start closing out their long contracts because they don't buy tops. Commercial interest does not buy tops. Market sentiment's up high. What was back here? Market sentiment was low. This is when they bought too. Right? Bullish. Declining open interest. So we had perfect storm here. Had a nice little range of accumulation. Commercial interest is breaking bullish. Open interest is dropping. Oversold on the WPR. Market sentiment's down. This was a gimme. This was... Everybody should have been on this trade. That would have been amazing. So what do we got now? Open interest is low. I use different colors here so that we can see this, because what we mean by this is this bullish. Open interest is low, is relatively low in the grand scheme of things. They're getting bullish. They've moved up. You know, as price moves down, they think rally. They're thinking rally now. Now that they've already dumped their positions. Look at this. This is soaring on the WPR. We're up there. Are we going to stay up there? We're going to stay up there like we did here? If so, find yourself a nice position. If you haven't gotten a safe entry yet, find one. Get a couple opportunities down here to find safe entries on this run up. So what's going on here? Oof. Market sentiment is down. Market sentiment is down. Everybody's like panicking. Oh, crude oil is going to zero. Sentiment is down, think rally. Market sentiment's down, think rally, think up. This is what they're thinking. They're thinking take it the other way. Strength indicator already showed that. And we're 1, 2, this is second week up now, right? Second week up. Yeah, second week we're up. We're right on the cusp of that 80%. Do you need to wait? I wouldn't. 0, 14, 20. They've been increasing their position for the last 5 weeks. 6 weeks. Is it too late? No. It's not too late. It's definitely not too late probably to get in some crude. I would watch this range though right here. I would watch that for a break. One thing that I do like to do, or have a tendency of doing with average true range, is wait for a bust, wait for it to pull back, and then continue in the same direction. Same principles here. So we're kind of soaring up high. We're up against resistance here, this daily pivot. We break the range, we come back up, and we kill it. Here's your safe entry. We break the range, we come back up, here's your safe entry, short the thing. Does it always happen? No, it doesn't always happen so cleanly, but I mean, there's plenty of room for error. Sure, the market doesn't always act the way that we want it to. We break the range, we pull back up into supply, and they kill it. 1, 2, 3, 1, 2, 3. We do this over and over again. We break the range, we pull back down into it, and they run it up. We did not get that same. This was some real fuckery going on up in here. As we came down, off this really high, and it just straight killed it. There was no bounce back. Maybe bounce back a little bit here. We did not break the range. We broke the range. We came back. We didn't have you didn't have an opportunity to short based off average true range break. They just follow it down, I guess. This was a huge gap. Okay, so that's that. So there's crude on with commercial interest, and these are the things that I like to use with commercial interest. Like the interest, obviously the index, open interest, Williams percentage, and market sentiment is something new that I've been using lately. And average true range. I think with these, I mean, do your horizontals, your supply, your demand areas, do your ranges, look for accumulation, look for distribution, and these have really been wonderful money makers. So thanks, Larry Williams. He's got a couple of great books out too. Long-Term Secrets to Short-Term Trading is one that I own. How I Made $1 Million Last Year Trading Commodities. And obviously the one that inspired the CoT report work that I've been doing is trading stocks and commodities with the insiders. Right. So we can get back to let's just get back to our weekly roundup here. So crude looking good. Looks like Australian dollar is something we definitely want to take a look at. This is a pretty nice indication right here. High grade copper. That's quite a jump in sentiment. This huge jump in sentiment right here. Feeder cattle. We're definitely going to take a look at that. If I don't go over the CoT charts on the roundup, then just look to the channels, because we'll probably do a study independently of each one of them. Each one of the markets are different markets. So something to look for here. Yeah, so high grade copper. Yeah, let's just highlight that guy, because that's something we're gonna have to pay attention to here. Yeah, ZM, like we said, Canadian dollars is getting a little bullish on their part. Looks like the euro dollar is getting. Looks like the financials are starting to rear their head here. Soybeans is another one that I was bullish on this week. They're kind of holding strong here. They're definitely coming off, a shellacking here for the short orders. These guys were selling hard, and it looks like they started picking up the pace a little bit. A little bit of selling, quite a bit more buying over the last 5 weeks. So ZS is definitely something to take a look at. Soybeans. I don't know if we've got that trade deal with China or whatever, if that's going to affect it. ES is something to look at. It's a 6-month index, so I can't say too much about ES, man. There's a lot of fuckery going on with that. Take a look at the seasonal charts. That's probably about one of the 6 indicators that I use is a seasonal study. ES usually rallies around this time, so I don't see a lot of bearishness or negative outlook on ES for very long. 6-month index, it's hard to tell, because they're just green across the board here on the 3-month, or on the 3-year. Sorry, I keep doing that. Take a look. Take a look at it though. Gotta take a look at ES. I've definitely posted some charts on ES, and I play ES week to week. So open, high, low, and close, and you gotta watch it. And apparently buy fucking dips, because whenever you do, it seems to work out okay. NASDAQ is floating here. It's floating. They're a little bit more bullish on the NASDAQ than they have been on the 6-month index, but they seem to bounce around quite a bit. They are bouncing around here. It's hard to see the extremes here. About the only time they held short was a short period of time in November, where they were closing contracts before the new year, and then they just kind of turned on a dime on the 6-month. from one foot to the other. Down 20%, 11%, went from 0 to 100 in a matter of 7 weeks, something like that, 8 weeks, close to 2 months, a little bit less. So the indices are, you got to watch those with commercial interest because they're hard to peg. That's why we have the 3-year index, so we can compare against here. Maybe up in this area when they started dropping down, that was your key to short it and take a quick short. But as you can see on the 6-month index, these guys are all over the place. And I think the Nasdaq is also in a seasonal area where it typically rallies too. So I'll explain the positive outlook here. So we can take a look at this on the chart too. We'll post this in the channel. What else we got here? Well, euro dollar, it's coming down a little bit. It's still bearish as hell. I'm not touching the euro dollar. And who do we have on the bullish side that's maybe breaking bearish? Not very much. The 2-year notes was something that I had looked at. This is quite a bit of sentiment change here. That's down near 36%. And this one's down about 20-some%. 28, right? About 28%. Let's just take a quick look at ZT. Yeah, and they come and go. Well, they are coming off our real bullish hot streak here. We came down a little bit, and they're about middle ground. So we're looking for extremes. We are looking for extremes. They were extreme last week, and then they switched directions. Well, about 20% increase in buying. So back here was, well, that was your signal. Let's just take a quick look at ZT and see if we can see anything based on commercial interest and our other indicators. So we got ZTs, our 2-year notes. Let's take a look. Boy, this is all over the place. At one point I thought, hey, this looks like distribution. This might come down a little bit, but did it? They got really bearish back here. I sold off a little bit. Yep. They were bearish back here. Start selling off a little bit. Then we got a nice ride, increased buying quite a bit. It didn't break 80. It wasn't extreme, but this is. It went from 0 up to 60-something%. That's a noteworthy increase. Yet it didn't take it to the moon. They didn't break up 100%, 80%. They didn't break up above that. And we saw the same difference here. From one extreme to the next, in a single week, picked up their buying. So why are they getting bullish here? Why are they getting bullish? The market sentiment was up high here. It's up really high. So we came down twice, right? Price dumped down a couple of times. Market sentiment was high. Sentiment's starting to decrease here. What do you got here? Really low market sentiment. Really low. And their buying's increasing quite a bit. Up over 80. Up in the 80%. And they're holding this outlook. They held this outlook for a while. Up over 80%. Doing more buying in the 6-month index than they have been for some weeks. Back in December. So into the new year, they were bullish on it. Into the new year. We did get some market movement here. But now they're about middle ground. I mean, I wouldn't touch this now. We certainly could if you wanted to. You can dump down to your weekly and then put your 5 days or your 6 days on your chart and take a look at last week and take a look at this week and See where if you can find a safe entry on this, maybe for a short, but I mean, they broke off quite a bit in a 5-week period. Will it sustain or will it continue? Well, 3-year index is down pretty low. They're both down pretty low. And so we don't have the data. This is over a year ago, but they were high. They were really high up in here. They were already long way back here. About a year ago, last March. So we're gonna get a rally. We're gonna get a rally on CT, on Treasury notes. I don't know. We'll take a look at the join the Discord, jump in the channels, and look at the seasonal studies. But this looked like a good opportunity for commercial interest. They knew. I mean, market sentiment's dropping. Open interest is high here. I'd say took it the other way. Oh, this is perfect. This is perfect for bulls. Market sentiment's down. Open interest is down, and they're getting bullish. And safe entry when it gets a little bit weak here on this bullishness. Wait till it looks weak and buy. Hopefully that makes a little bit of sense. This is the first episode. So to keep reminding myself, this is the first episode. I've got no character at this point, personality-wise. And hopefully in the upcoming episodes we can, the clarity will be there a little bit more. The flow will be there a little bit more, and we can really start utilizing CoT report 6-month, 3-year index, and leverage this and look and see why markets move the way that they do. So this is just a roundup. If you want more details, hit us up on the Discord. Plenty of an analysis on there, plenty of time to sit and analyze each commodity a little bit more in depth. But as for the Friday roundup goes here, take note of these. We'll post this in the Discord so that everybody can see that these are the areas to watch this week. And as we did with the 6-month index, do with the 3-year index, and take a look and see where the market sentiment has shifted considerably. Because this can be your leading indicator as to where the future market's going to go. So hopefully this, combined with the other indicators that Larry has been so graciously assistive in his literature, market sentiment, WPR, a lot of these indicators he created too. Williams Alligator, that one's pretty decent. I don't follow it that much, but look at your moving average on the weekly, 52-week moving average or something like that, and if it's above it, say, hey, put that in juxtaposed to commercial interest, and see if you can time where the market's going to go. CoT report's not a crystal ball, but it does help considerably. If you want to be on the right side of the trade, I find this to be a very helpful leading indicator. So anyways, let's wrap this up for the week. All the stuff will be found on Discord. Thanks for tuning in. We really appreciate it. And we'll see you next Friday on the next Friday Roundup CoT report. Thanks a lot.